46% of people living paycheck to paycheck.
I have been applying for a minimum of 10 to 25 jobs every single day for the last 3 months. I haven't even received a rejection letter. And then on top of that, everything is expensive. I don't even want to do much with my money. I just want to be able to take care of my dog.
As someone who has over 5 years experience in customer service, whether it's in fast food or being a sales associate, I myself cannot find a job. Companies like McDonald's and Tim Hortons aren't even hiring. Why is there such a job shortage and why can't we get hired? And this is happening all across Canada. Like, what are we supposed to do?
She's got 5 years retail experience and she still can't find a job. And the banks are saying this is going to get a lot worse before it gets better. So Canadian bankers worry retail customers could be hardest hit by tariffs. And basically, they're saying that this is going to impact spending. So it's the Bank of Nova Scotia Chief Risk Officer Phil Thomas who says retail banking customers could take the hardest hit if the United States prolongs its trade war with Canada. Scotiabank's head of risk said the lender is scanning its portfolio of customers across personal, commercial, and corporate banking for those most impacted by tariffs. He said job losses caused by tariffs will determine whether retail customers are able to absorb the trade war shocks. And to be honest, we already know the answer to this because the economy is already incredibly weak before the tariffs even impacted. And Scotiabank knows this because they were laying off workers in 2023 as well. They laid off 3% of their global workforce, and you just don't do that if you're a growing company. It just doesn't happen. So obviously they're even seeing problems in their business around the global economy as well, because this wasn't just Canada, which they were talking about. And interestingly enough as well, what I want to show you is the CFIB Business Barometer. It tells the story completely here of what's going on, and it's tanking right now, and it's never really recovered to pre-pandemic levels here, as you can see. So very interesting. And then it says in recent years, Canada's banks have been setting aside more provisions for credit losses. The funds lenders reserve to cover potential loan defaults as a buffer against higher interest rates and a slowing economy. But as I've pointed out many times on this channel, they've got like $3 billion in loan loss provisions, and there is trillions of dollars in outstanding loans. So when you actually look at the percentage of the loan loss provisions as a percentage of their total outstanding loans, it's less than 0.5%. So it's just a tiny fraction, and we've got delinquency rates on everything from credit cards to auto loans to mortgages that are going through the roof right now and are just increasing, and you've just got them blindly ignoring this, it seems. During the first quarter earnings that ended January 31st, the lenders adjusted their provisions slightly to account for the uncertainty prompted by US President Donald Trump's tariff threats. But reserves for the year ahead will depend on the duration of the trade war. Increases to provisions will likely be driven by rising risk in the retail business, Mr. Thomas said. It also depends on the type of fiscal stimulus or financial support the federal government provides for consumers and businesses. And remember, guys, that during the pandemic, it took them about 3 or 4 weeks after it all started and people were getting laid off before the government to come out with their pandemic stimulus program. Now they're talking about it before the so-called mass layoffs, even though we know that that's already started. But by the government's numbers, there's no mass layoffs right now, at least. So why would they need to do a massive stimulus program? I mean, Mark Carney was just saying the other week the economy's strong, and then he was saying it was weak, or then it was strong. So I'm really confused actually on that one. But anyway, so that was a bad joke, by the way. This is where unemployment starts to become the catchword for the industry and for us more broadly, Mr. Thomas said. Small businesses, will they start laying off people because tariffs are impacting their business directly? I mean, of course. I mean, it just does not take a rocket scientist to work it out. In fact, they're laying people off because the demand demand in the economy is going down anyway, without the fact the US is heading into a recession, and that's Canada's biggest trading partner, whether you like it or not. So obviously them going into a recession means less demand for Canadian exports, and it's already weak within the domestic economy because it's already in recession. And then Mr. Thomas spoke with a mortgage broker recently who said that home buyers are pulling out of deals because they were unsure whether tariffs would impact their job security. And of course, that is a given. In fact, if you go to this Ledger poll here, it also reveals some interesting things as well, which we already knew, but still. So a new poll suggests that 40% of Canadians are worried about losing their jobs as many businesses scale back hiring plans in response to the trade war with the United States. And it suggests that more than half of workers in Ontario were concerned about job security, the highest in the country, while just under 1 in 4 in Atlantic Canada were worried. 39% of people in British Columbia and Manitoba and Saskatchewan reported they're worried about losing their job, compared to 35% of people in Alberta, which is interesting because Alberta is one of the most dependent on the US, obviously Ontario first, but then I believe it's Alberta, especially Calgary. The latest Ledger poll says that while 61% of respondents described their finances as good, 46% said they are living paycheck to paycheck. 46% of people living paycheck to paycheck in the environment that we have right now, where a spike in unemployment is almost inevitable with what's going on. And you're already seeing, impacts of what's happening with the economy. This isn't because of the tariffs. This is just because the economy has been so brutally bad. In fact, if you go here and you look at consumer confidence, it's never recovered since the pandemic. And if you look at bankruptcies here for Canadian companies, you can see that we had a massive spike in early 2024, and we're likely going to see another massive spike right now in Canadian businesses going bankrupt. And if you look at this spike right here of 625 companies, that is the highest going all the way back to 2008 and 2007. And we know what sort of state the economy was in back then. You don't have to be a rocket scientist to work it out. And obviously the CFIB business barometer, as I pointed out earlier, that is tanking as well. So you're seeing multiple things. And, like I said, the banks, they don't have the loan loss provisions to cover even 0.5% of their loan book. So that shows the risk that is in the banking system right there. And how is it possible that I can see it, you can see it, but people who are paid millions of dollars in bonuses cannot see this? I mean, surely they must be pretending. It's speculation at this point, but let me know what you think in the comments, because it is just mind-boggling that you have this kind of blissful ignorance that is going on. And then TD Bank's chief financial officer said that while the immediate impact is on directly affected industries, including auto, agriculture, and manufacturing, a prolonged trade war would erode consumer sentiment and business investment. Then you have a higher unemployment rate that then seeps into the bigger economy. And the unemployment rate is already higher, and that's the thing that we already know on this channel. In fact, I'll pull it up real quick. If you look at unemployment over the past couple of years, it has spiked. So it's been going up for the past 3 years. Canada has been in recession since 2022. If you exclude population growth, the GDP numbers show that. And if you look at GDP per capita, that just shows that there's been no growth there. And in fact, Canada is in a lost decade. So you can't ignore these things. And they're talking about a spike in unemployment. Well, unemployment is already spiking. So what's going to happen when it goes from 6.6% to 9%? Are they suddenly going to be shocked? I mean, it's been going up for 3 years here. And unfortunately, I think it's more to do with blame. Now they're going to blame this on the tariffs and the trade war, just like everything was blamed on the pandemic back during 2021, 2022. And that's just a continuation of what you're going to see. It's not going to be the rampant lending, the ramp up of government spending, which basically distorted the economy economy, made everybody get into way more debt than they otherwise would have done, and made the economy way worse and weaker in the long term. It's never going to be about that. No, it's always about the pandemic. It's always about Donald Trump. It's just absolutely crazy and insane that some people can't work it out. So anyway, guys, I want to thank you so much for watching this video. If you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN and also want to help out the channel, go to expressvpn.com/marketmania for their best deal. And I will see you in the next one. Take care, guys.